My bad. What? Yes, you
Alrighty.
do. You should be a pro
I'm
now.
doing great. How are you doing? How's our Chi Chi fam
Okay, you ready
doing?
to go live? Okay.
Alright. Yay.
Okay, we're
Well, of
live.
course you are. You're out showing homes all day long.
How you doing?
Yay!
I'm good. Chi fam, I think they're doing good, but I think I'm gonna let them answer that for themselves. But I think they're doing good. But yeah, it's Friday. Oh my gosh, I was rushing to get
That's
here. Did you
awesome,
know
Chia.
that? Cause yeah, and I got a listing coming up tomorrow, so I had to go and prepare that. Yeah, I had to go prepare that, send everything over. The staging just got done, so we're sending all of that over to my assistant, so she's making it go live by tomorrow. But yeah, that's
Good.
basically what I was doing, rushing here, making sure I wasn't gonna be late for this live session. But okay, first things first, let me do share my screen so that way I could kind of go over a market update. Okay, let me share my screen. There you go. Alright, let's go check out how the market is like right now. 3 bedrooms, 2 bath, 2 car garage minimum. County, Sac, El Dorado, Placer. Okay. So remember, these are the criterias that I'm just putting in as
That's
minimums.
on my phone.
So if
I
a
like to
home
check you
has 2 bedrooms or
out because I
one
can't see
bath,
you on
it's
my
not going to show
laptop.
up on this data. Okay, so I just want you guys to know that. I don't know if I made that clear before, but let's find out how many homes are available right now for sale in 3 counties for those criterias. Ooh, I can hear myself. There's 1,000 homes. I don't know if you guys can see this, but let me zoom in. See? So there's about 1,157 homes available right now in 3 counties. Okay. Now let me change it to new listings that came out today. 153 new listings that came on today. New homes, which is good. Now let's change this. Go to close. How many homes sold today? Let's change this. June. 24 homes sold today. Hmm. How about last week? How about last week to now? 386 homes that sold in
Yay!
3 counties.
Hi,
Sac, El
everyone.
Dorado, Placer. Okay.
That's awesome.
That is your market update.
Happy
Just a
Friday in
little
this
quick sneak
crazy heat
for
right
you
now.
guys. But let me
I'm hoping
transition you
that
back
everybody is going to
over
have some really
to
great plans
Lisa,
this weekend.
guy.
And
All right,
the
Lisa, you're
topic that
on. Everybody
Chi and I
sees
keeps
you.
getting asked is the Biden
We have like what, 3
tax law
people
for home
watching us right
buyers,
now.
right? So I do have
Happy
some
Friday, everyone.
information that I would like to share with you guys. There's actually
Oh my gosh,
two
so hot.
bills that are being proposed right now. So let me talk to you about the First Time Homebuyer Act, up to $15,000 that you would get. This is
Yeah.
a tax credit. And this tax credit is kind of nice because it's not a tax deduction. Unlike a tax deduction where it will deduct whatever your income bracket, if you're making $50,000, now, you take that out. It doesn't work that way. It's actually a credit. So say for instance, if you typically owe $5,000, at the end of the year, and the credit allows you up to $15,000, you'd actually get a refund of $10,000 instead. So it's actually kind of nice. Okay.
Yeah.
The criteria for this is that you must not have owned a home in the last 3 years. And I'm going to tell you guys about the criteria, but just so that you know, it has not taken effect yet. So these criteria could definitely change. Okay. Right now, what we're seeing is that you must have not owned a home for the last 3 years. If you're cashing out, though, you got to keep in mind, if you're cashing out on your 401ks, if you're cashing out on stocks or selling your cryptocurrency, since it's very, very volatile right now, I would highly advise you to talk to your tax advisor ahead of time so that you can strategically plan all of your financial benefits. Okay. You also must file this in the year that you bought your home. So if you're buying your home this year and this takes into effect, you have to utilize that tax credit for this year. The income requirement that's needed is 160% of the area median income. In Sacramento, the area median income right now is $69,360. So if you multiply that by 160%, you can't make more than $110,976 in order to qualify. You also cannot have owned a home in the last 3 years. Home purchase.
Didn't I hear something about how like they're saying that didn't I hear something about how like they're saying
there's two bills that's going to be passed. This is the First Time Home Buyer Act. You don't have to have that. The next one, what I'm talking about, you do have to be first generation. So we'll get to that in just a moment. Okay, Chia?
Got it.
All right. So going next, again, you don't have to be first generation for this one. You just can't have owned a home in the last 3 years. Okay. So the purchase price exceed 110% of the median home prices. Chia, can you take a moment to see what the median home prices are here in Sacramento? Isn't that crazy? It's almost $500,000.
Price right now is
good gracious. Okay, so let's say 425. Multiply that by 110. 5. Okay, so the home price cannot be more than $467,500, which is actually quite doable. Okay. You do not have to repay this tax credit if you keep the home for 4 years. Otherwise, you will have to pay a portion of that tax credit back depending on the year that you sell it. So this is not meant for flippers. This is not meant for investors. It's truly meant to help the lower income families to be able to purchase their home with a little bit more assistance. Okay. So this one is called the First Time Home Buyer Act, and it is up to $15,000. When I say up to $15,000, depending on what price that you're buying it at, it's usually like a 10 to 15% bracket of whatever it is that you're buying. But again, we don't know the full gist of this yet. It's still being drafted, and we're still waiting to really know what the full criteria is on both of these bills. Okay. The next one is called the Down Payment Toward Equity Act. This is a grant. So supposedly it offers $25,000 up front and at closing to use towards a down payment on your first home. It is not a loan. It does not accrue interest, and it does not need to be repaid at any point. This is a little bit more strict though. So homeowners not only need to not have ever owned a home, you need to be first generation home buyers, meaning your parents and your parents of your co-signers, if you happen to have one, also cannot have been homeowners ever before. Because of its tighter requirements, the income requirement is also less too. So earlier we mentioned in that first tax credit, your income cannot exceed 160%. For this grant, your median income cannot exceed 120%. So again, in Sacramento, the median area income is $69,360. You multiply that by 120%, you get $83,232. So you and your co-signer, okay, cannot exceed that amount. Does it make sense?
No, it does.
Okay. Right. So both of these bills are still being drafted and still need to be officially introduced on the House floor. And I know a lot of times you guys are waiting and anticipating for this, especially being a first-time home buyer. Then this would also need to go to a committee, as well as several hearings and reviews, then markups and revisions before even going in front of the full chamber to get the vote. Once these steps have all passed, the bills
Yeah.
would head to the Senate and then to President Biden to sign into law. No data as of yet. The only certain thing that we know as of right now is that lawmakers and the new administration is working on considering this bill. So we don't know when it's going to take an effect, how long this is going to be taken care of, and whatnot. But I highly advise you guys don't wait for this bill to be in effect to buy your home. Those that have bought homes just last year, especially those who just recently refinanced with me, already got a 10 to 30% increase in their home, which in many cases for my clients was about 20,000 to 100,000 in the Sacramento area. That's only in 1 year, guys. Okay. And those in the Bay Area, my Bay Areans, have already increased equity in their house by about 50,000 to 150,000. And it's just crazy ridiculous. This is where I'm going to say don't step over dollars to pick up pennies. Don't wait until this to be in effect because everybody's rushing to buy. You already know from last week's show that the price of lumber is continuously increasing and inventory is still considerably low. The builders aren't able to build as quickly, again, because of the lumber prices rising. So if you want to take advantage of the low interest rate still, if you want to take advantage of the fact that homes are still affordable in our Sacramento area before the Bay Area, which is again only 2 hours away, is
Yeah.
going to come up and buy up these homes. You guys have inside scoop to know that where your neighborhoods are good to look at. So get started right away.
Yeah, yeah. That is crazy. So I'm looking at this legislation right here by it's by Consumer Actions right here. Here, let me just share my screen so that way they can see it too. And what it's saying, First Time Homebuyer Act is a bill that would provide a tax credit for first time home buyers up to 10% of the purchase price or 15,000, whichever one is less, I'm assuming, right?
Correct.
In order to be eligible for the full credit, potential buyers must not have owned or purchased a home within the past 3 years. Okay, so this is one of the programs. Let's talk about the other one, what I was mentioning about how you have to be a first generation homeowner or
Correct.
home
So
buyer.
so that's what that down payment toward equity act is, Chia.
Got it.
Okay, so it's not one or the other. You can actually get both from what we're seeing and what we're reading.
Hmm.
But we don't know that for a fact just yet. It has to go through a lot of hoops and a lot of reviews before they actually sign it off. And the 15K for the first time home buyer act, up to 15K for the tax credit,
Yeah.
originally it was supposed to also be included, up front, but they took that out and now it's going to be a tax credit when you file your taxes.
Oh.
Yeah, okay. But the down payment toward equity act, remember now there's two.
Mm-hmm.
So the down payment toward equity act is a grant supposedly up to 25,000. That one is supposedly upfront, okay? So we'll see what happens.
So then, but then this is just all proposal, right? Like none of this has passed yet to where it's something that a buyer could apply for or qualify for, correct?
Correct.
When do you suspect this to probably pass, or do you think this is even gonna pass?
I really don't know. I mean, it sounds like a great thing and everything, but personally, with inventory being so low,
Hmm.
I think the incentive to go should go to sellers.
Yeah, I know. I was saying the same thing to this one guy on one of our Facebook groups. He was saying, buyers, hurry up, 15K, free money, and I commented on it. I was like, I don't think we need something like this. Yeah, this is great for buyers. This is great, but like, this is just gonna increase price.
Yep,
This is just
exactly.
gonna this is just gonna create more bidding war. This is just gonna create more people to fight for a home, and like price is just gonna keep going up. So I don't see this helping the economy at all. And like Yeah,
I
I don't see that at all being a solution to today's craziness, right?
Oh, absolutely. I mean, Obama proposed this in 2008 when he was in office, and it really, really worked very well because during that time, there was so many houses on foreclosure, so many empty houses, and things like that. So that makes sense for that time. But during this time, like you said, it's creating. We already have such a crazy bidding war going on already. This is just going to increase it anymore, and that's the thing. If you're getting a 15,000 credit on top of a $25,000 credit, let's just say this comes into effect,
Yeah.
right? This is $40,000, which is fine, which sounds great. However, if the home prices increase by another $50,000 to $100,000, which it kind of is doing right now, it's not even a wash.
Yeah.
It's not even a wash for buyers. And the other proposal with what people don't know is that Biden's also considering taxing homeowners already. If you sell, you may get taxed even more, which is going to de-incentivize, more homes being on the market. So now you're proposing something that is going to increase the bidding war, and you're also proposing something that's going to decrease the incentive of people wanting to sell their homes. I don't see how that's going to work out. So I think they're going to talk about that. I'm assuming that those that are looking at this is going to put all of that in consideration, and it's going to take a while for it to be in effect because of it.
I know that's crazy, right? Because like
Yeah,
we know investors that probably hold on to a lot of properties, and this is probably the year that they want to kind of offload on those inventory, right? But because Biden's planning on proposing that, if you sell, you're gonna, or if you have capital gains past $500,000, you're gonna get taxed. Those investors are not gonna want to sell all their properties now.
right,
They're just gonna say, you know what? I'll just hold on to my properties and I'll just sell one at a time. So that way I don't go over that 500K gap and not
right,
get taxed, right? And
right,
then now that doesn't help with anything because we need more inventory.
right.
We need more inventory so that way the market could be more steady for all buyers right now. And we need more inventory so that way price could start being more stabilized and not being so crazy and bid it up. And we need more inventory because like people's income is staying the same, but interest rates are going up.
Yeah, I mean, that is the tough part. I mean, for the last, I would say, at least 50 years, income has not increased high enough to catch up with
Yeah.
inflation. It hasn't caught up with goods and things like that, and it's just getting more and more difficult. So I'm gonna say for those of you, I'm ready.
You can hear me, right?
Yeah, I could totally hear you.
You can hear me? Okay, yeah, it's probably your connection. All
Sorry,
right, well,
guys.
we're live again. Some people logged out and they logged back in.
Oh, thank you so much for your loyalty, Chi fam. I'm just in an area that doesn't have the greatest internet connection, so pardon me, guys.
It's all good, no worries. So, what was you saying again?
Where did you guys lose me?
We lost you where we mentioned about the incentives for homeowners getting taxed on capital gains.
Okay, so again, it's to me that proposal may not really work in our effect, but I would say 2 3 years down the line, it's going to get worse. Um, if you are considering, I would highly recommend you sit down, talk to a loan officer so that you can get fully prepared. Or even if you're not yet prepared, at least you know what you need to do to get into that situation because it's not going to get any better. I'm not seeing that it's getting any better. I'm not seeing that it's going to quote unquote crash because again, you got all these people 2 hours away heading in towards this direction. Now, there are reports that show that there are more people moving out of California than
Yeah.
there are people moving into California, which a lot of people think was like, okay, the housing market's going to be, hopping again. As soon as that happens, okay, you got a lot of more savvy investors this time around than you did in 2008 as well. I'm an investor myself, so let me tell you, I'm waiting for that to happen too, so I can get more properties as well.
Yeah.
And because of that, because there's still a lot of people who are, I could say, sitting ducks waiting for that to happen, it's not going to happen again because of the supply and demand chain, right?
Hmm.
When there's more supply than there is, or I'm sorry, if there's more demand than there are supply, we're just going to have to wait for that to happen.
Yeah.
And a lot of times when I'm pricing out for people, I'll tell them, say, okay, if your mortgage is right around the same amount as your rent, does it still make sense for you to buy? Absolutely. Because let's just say that the market does crash, because let's face it, none of us have a crystal ball to really know that. Anything could happen
Nope.
that could skew that. I don't want to put any negative thoughts out there, so I'm not going to say it. But anything could happen to our country that could shift it for sure. Okay. But again, if your mortgage is where rent is or a little bit higher or close to that, I would really highly recommend for you to look at that, because even if you are renting, the criteria for renting is actually much harder than the criteria for getting a home. Most landlords require, they also run your credit, and most landlords will require you to have 3 times the income that you're making to even get into their rental property. Because of the eviction moratorium, they're getting more and more strict. For FHA loans, you can go all the way up to 57% debt to income ratio. For renting a home, it's only 30%. So when you look at the numbers in that way, okay, you got to ask yourself, okay, what makes most sense for you?
Not only that too, but inflation, right? We already know
Mm-hmm.
inflation's coming.
Correct.
And like real estate is also a really good way to hedge away from inflation, right? Because it's just gonna also go out with it. So
Right.
I think because that's why all these big hedge fund companies are buying real estate right now, right? Because they don't want to rely too much on stocks. They want to have something that they could kind of something physical, right? That they own. So a lot of these investors are coming into this market buying like all this real estate up. Like I was reading this article the other day about how this hedge fund company goes to new builds. They don't just buy one, they buy like multiple homes at the same time, right? And they're cashing
Absolutely.
out like millions of dollars at the new builds.
Absolutely.
So home buyers can't compete with that. We can't compete with that because we're not buying a whole lot. We're just buying one home.
Right. And that's we see that a little bit more in the Midwest because the home prices are a little bit lower, so the investors and hedge fund companies can do that a little bit better. But what they do is they change hands, right? The hedge fund companies now becomes their own real estate or developing company where they'll turn around and they'll buy all of these homes from the home builders and create their own home building company and sell it back at a much higher cost, because apparently they can right now. The inventory is so low that they're flipping brand new homes to do that.
Yeah. No, that's exactly what's going on. Man, like you want to know something? Speaking about flipping, I have a client that bought a home just not even 6 months ago. And he's selling his home now. And he's making, oh my gosh, it's probably gained up to like $70,000 in value.
That's incredible.
So he wants to sell. He's like, you know what? I don't know if this opportunity is gonna come by again. Man, I'll take the cash. I could go. I could work anywhere. I'm remote, so and so he's like, yeah, I might be putting my house on the market, Chia,
Yeah,
just because equity's been that high now.
right.
So yeah, it's crazy. People are doing that right now. They're buying a home, they're holding on to it, and within a couple of months, they will flip it, put it back on the market,
Yeah,
make profit.
yep.
So yeah, it's such a crazy time right now. My gosh. And like for all my buyers right now that are still looking and getting outbidded, man, cash is king.
Yeah,
Cash is king, and I'm telling them right now, you gotta. if you really want to win the offer, you're gonna have to like guarantee the seller some sort of cash.
Yeah.
You gotta guarantee them some sort of cash so that way they know that they're gonna get a high net. Because if you don't do that, then they're just gonna go with a person that is willing to offer cash on the side.
Right.
And it's so sad because like all these buyers right now, they're like first time home buyers, and they don't have deep pockets.
Yeah.
They're needing that for the down payment. They're needing that for the closing costs, and some of that for like the move-in. Moving is not cheap too. You gotta go rent a U-Haul. You gotta go get boxes. You gotta take time off. You gotta break your lease. Hopefully not.
Yep.
But you gotta do all of that. So it's yeah, it's such a crazy time right now.
Yeah, it's definitely not easy, easy as it used to be. But I hope that, GT fans, don't be discouraged. If anybody could find you something, it's definitely going to be Chia. I've seen him work several miracles. And it is crazy out there. We've had people, again, who were kind of on the fence and whatnot, and it was a year and a year and a half already, and they're still looking. And then we also have people who are super proactive, listen to everything that Chia says, and a month later, a month after I pre-qualify them, they're already in contract to a house. So again, if it's meant to be, guys, fate has a great way of working that way. Don't lose hope. Don't lose your faith. Just go ahead and continue to look. That right house will find its way to you.
Hmm. That's true. True. And like right now, like even though it's so crazy, just have a real expectation. And
Yeah.
and if you really do need to buy, like you might have to compromise in this market. Maybe you renting a two-bedroom home, one bath, and you guys are okay, but you wanted to buy like a four-bedroom, two bath, you might not be able to do that. You might have to just stick to a three-bedroom, two bath, or maybe even a three-bedroom, one bath. So like I have a client right now, and that's exactly how they were able to get into contract was they initially wanted a four-bedroom, two bath, and after looking for a while, they got really frustrated and they didn't want to keep paying rent. They want to eventually, settle down. So I had to talk with them and I had to tell them, what are you guys willing to compromise? And they're like, like as long as we have a minimum three-bedroom, I think we'll be okay. And like I had to tell them, what about sacrificing a second bath? Because that's going to be able to bring down the cost a little bit more to where you guys might have more option.
Right.
So then they did that. Like they lowered their criteria from a four-bedroom, two bath to a three-bedroom, one bath, and we were able to find more homes because they have more options now and get them in contract.
Yeah.
So that's the market right now, and you have to plan long term, right? So for this scenario, they know that okay, right now they just need to find a home so that they could stop paying rent. So they compromise a four-bedroom, two bath to be able to own a three-bedroom, one bath, and then in the future, when they've been able to save up more money, because when you're buying, when you're owning a home, it's kind of like a forced saving account. You're paying down the equity, the principal, and if the markets keep going up like how it's been doing right now, your equity is also growing so much more faster too. So
Yep.
they're hoping their game plan for the future is maybe in 5-6 years, once the principal's been reduced, they could probably sell it and upgrade for a home that is a four-bedroom, two bath.
Right.
That's a lot more doable versus paying rent to where your rent is as high as a mortgage right now.
Right.
And you're not going to be able to reap the benefits of the equity. Your landlord will, but not you. So
Right.
that's the strategy that they're going with, and they're pretty stoked. They're in contract right now, so we'll see. But let's go back to the Biden uh, proposal.
Okay.
Um, do you think a lot of buyers is going to try to take advantage of this? Like, let's say right now, right,
Right.
buyers that are already approved for like a regular traditional FHA or conventional, do you think they should apply for this?
Absolutely. I mean, once it's proposed in, it's pretty much free money. Okay. Um, I don't know if you actually have to apply for it. It might just be applicable because in 2008, again, all you had to do was file your tax returns. And if you bought it in that year, that was it. You just had to show your tax accountant that that was the case. Okay. So it was more automatic. I'm not sure if this one's going to be the case. I'm not seeing anything that says anything different. So I'm going to assume that it's the same. But again, it's going to go through all of its ringamaroos before we actually know exactly how they're going to want this to be done.
Right, and like they didn't really share too much information as to what the qualifications may be, the guidelines, because that could always change,
Correct.
right?
So what we have right now is what is quote unquote drafted and proposed. But everything that I just said could be a complete wash. It could be, 50,000. It could be 5,000. We don't know. Okay. They're probably going to also look at the budget and see, okay, what else is needed. A lot of the small businesses were suffering during COVID. So they're going to have to take a look at it. I'll say, okay, we have X amount of dollars to help people out. Where this money going to be going? And there was a lot of teachers that also got laid off during COVID. There was a lot of that happening too. So there's going to be a lot of things that are pulled. We are focused on real estate, so what we know is this right now. But there's so many other things that Congress has to look at and sort out as far as budgeting goes too.
Do you think that it's gonna be similar to like those down payment assistance programs before, where it was limited funding based off of zip codes or certain areas?
So the proposal for this was so that the minority community can have a leg up because back then, in order to buy a house, you had to be white. You had to have all this criteria, and it was harder for minorities to purchase. They are not going to do that, from what I'm reading and what I'm gathering, just so that there's no discrimination or racism tagged to this at all. Um, again, because it's not.
Don't you think it's a little odd that this seems to be targeting towards minorities?
Yeah, I know. It's almost like a reverse racism type of thing, right? Um,
Kinda. I mean, I've spoken to a lot of my peers, and like we have a lot of things to say about that. But then like,
I know, I know. It's, gosh, we can get into a very long and very heated conversation about that, right? Yeah, depending on what side of the spectrum that you're on. So I try to not to go towards that route too much. You're right. There are a lot of programs like that Shara and other grants out there right now. It's to incentivize certain neighborhoods who that aren't really the greatest neighborhood and trying to get people to buy in that area. That kind of makes sense to me. If nobody wants to buy that area, here's the incentive for people to want to live in this neighborhood. Okay, um, because there is a housing market cap. Earlier, we mentioned that area median housing for Sacramento area was roughly about what 467 for the 110%. 450 is the average for Sacramento. So 467 is going to be the cap of what you can buy, right? So it
yeah,
is, without really saying that it's in a certain neighborhood. It kind of typically is, right? Because there's only certain
yeah,
neighborhoods that houses are less than 450
it is.
or 450 to 467, right?
Yep.
So it is, but it isn't. So there's a lot of underlining things that they want to propose. Um, and that's the other thing, too. Even if they raise that price, they're going to have to raise the income limit and all that sort. And then now everybody's going to be able to get it, which I feel like if you're going to do this, make it open for everybody then.
Right.
That would be
I
the most fair, right?
so based off of the information we know about this right now, I feel like savvy investors, do you think they're gonna try to take advantage of this? Because
Oh, of course,
let's say I take advantage of this 50K tax credit that Biden's proposing, and
right?
then I use it to buy a home. Yeah, I gotta be primary, but for how long? Let's say for a year, and then I rent it out the next year,
That's true.
right?
That's
Because
true.
it
There's
says
no
it says that
criteria
you
that
have
says
to.
that you can't do that right now.
Right,
So
it
you're very
doesn't.
right about that.
So this could be a way for individuals to utilize this because it's basically free money, right? To
Right?
buy a home, live in it for a year, rent it out, and start building your portfolio from there.
Absolutely. You could. So far that I'm seeing.
Right, because I don't see anything else on here that says
Yeah.
otherwise.
You still have to keep it says you have to keep the home for 4 years. It doesn't say you have to live in the home for 4 years, but it is meant for to be a primary. So if you are trying to flip it or anything like that, you could get yourself in a lot of trouble.
Yeah. I am very curious now to see how this is gonna play out.
I know.
There's gonna.
Once I think it, again, it's got to go in before it even goes into the house and everything like that. There's going to be multiple markups, a lot of revisions. I'm pretty sure, and I'm hoping that the people who are doing this has real estate knowledge to be able to say, hey, we talked to the banks, we talked to the lenders, we talked to all of the real estate chambers to see what would be the best outcome for this. And
Yeah.
if they do that, it's going to take much longer too, because prices in the Midwest are definitely a lot lower than it is here in California. California is the highest real estate market right now. So where does that leave everybody, right?
Hmm. Oh man.
Yeah, and to make it fair for everybody, to make it so that everybody has opportunity. And let's go back to what you said earlier. The opportunity right now is for a certain criteria, right?
Yeah.
And for all those people, especially most people fall into the middle class category. Now, when I say middle class, there's like 100 shades of middle class,
Right.
right?
Right. Right.
Where we're always feeling like we're running into that hamster wheel, or right when you get into the next tax bracket, you get taxed more for certain things and all sorts of stuff. So you're always going to feel that ping of, you know what, I just barely made that. And you know for a lot of people. And what if you have a car debt? And most Americans do. They have a mortgage, they have a car loan, car insurance, all of that comes into play too. So now you're looking at, I was like, okay, I can only make so much, I can't have this much debt, here's the restriction and everything like that. So where does that come into play, especially for us Californians?
Yeah. How do you feel about the tax proposal that Biden's administrators are proposing?
So I was, because I want people to give me the benefit of the doubt, I want to also give our leaders the benefit of the doubt, right? In saying that, okay, the intention was good, the intention was similar to what Obama was trying to do as well, but this is a totally different time, and I'm not sure if that was evaluated, or if that was just like, you know what, we see a need, we see that there's very few people of this area not being able to buy a home, so let's give them a leg up, let's put that in. I can see that as a good initiative, but in order for everything to come into play, to make it truly fair, right, for
Hmm.
everyone, and anytime anything is proposed, I think it's only fair if we looked at it as a whole to see, okay, well, let's just say, for instance, if you're in this certain income bracket, you get 15,000. If you're in this income bracket, you get 10,000, so on and so forth. I think that would be a lot more fair. What do you think, Chia?
No, I agree. But like, it's still really unclear what that tax proposal is going to be, right? Because again, it
Right.
hasn't passed.
Correct.
It's all just up in the air right now.
Right.
But so far, I don't like it. And like you mentioned earlier about homeowners getting taxed, right?
Yeah.
And they're not just getting taxed on capital gains, but then when you're a homeowner, you and me, we were talking about assessment taxes for property tax.
Yeah, if you're already a homeowner, you already know. I have quite a few people already who bought a home just last year. It's like, why is my monthly payment differently? So why, I thought it was going to be keep staying the same.
Mm-hmm.
Well, everybody got their tax increase
Mm-hmm.
last year, and it might actually happen again this year. anytime the economy is taking a toll, they reevaluate everything, every asset. And if they can't get it from the small businesses, which took a hit last year, it has to come from somewhere. It's unfortunate, but it is what it is. And when that continues to happen, okay, now when you're an investor, when you hear the term investor, you automatically assume that, oh, that's the rich guy. That's not always the case. When you're trying to build a legacy, the building stage takes a while for that to happen.
Right.
Some of these investors are waiting 10, 20, 30 years in order for the home to be paid off. And, they're buying homes where they're renting it out for the same price as their mortgage.
Yeah.
That's, to me, a little bit on the risky side because anything could happen, right? A faucet can break, and now you're going to have to put a little bit more in and waiting for that 15 to 30 years for you to actually reap the benefits. And then all of a sudden, you're thinking that you're reaping the benefits. It's like, great, now I get to have this. Now you're getting taxed more on the income that you're getting for rentals. And on top of that, you're getting taxed if you even sell it. So it's a hard pill to swallow for investors who are trying to get that leg up and building that legacy for their family. Not everybody is there yet. In fact, most people aren't. And that's where that's where I'm having a hard time, swallowing that pill of, okay, is this really helping our economy or is this going to hurt our economy even? And right now, just like you, I'm leaning towards it's hurting.
Desincentivizing.
Yeah,
it is hurting.
Yeah,
it's not
I think
incentivizing any homeowners or investors. And going back to that supplemental tax, right?
Right.
It normally, okay, so Chichi fams, if you guys don't know, I want to kind of walk you guys through this right now. When you buy a home, the home gets reassessed based off of the new purchase price that you bought it for. So the supplemental tax is the difference between that purchase price, which you bought it for, and when the owners bought it. So you guys can see if they bought it and it was 200K and you bought it at 400K, that's double. Property tax is going to get reassessed. So when you get a quote from your lenders and they put your impounds and everything all in for your mortgage, they already calculated all of that for you on your mortgage. But your supplemental tax, you're going to be receiving a bill maybe a couple months, maybe a year when you move in, depending on when you close. And that supplemental bill is a one-time thing. You paid off, and then now everything goes back to normal to where they can just take out money from your impound account to go and pay the lenders, pay property tax and escrow fees, all of that. But what Lisa said is that because the economy is doing so bad lately, you as a homeowner just got reassessed last year. So, meaning your mortgage went up. And you probably called Lisa, you probably called your lender and said, hey, what the heck is going on?
Yep.
And it's because your property tax got reassessed. And what's been going on? Depending on how long you've owned the home, maybe you've owned it for a year, 2 years. What's been going on this past couple of years? Right. Prices has been going up.
Yep.
Every month, price has been going up 3 to 4%. So when they reassess, they see that, oh my gosh, this homeowner value went up. We got to increase his tax. So that's why your mortgage goes up, because it's not because the principal interest goes up. It's because the property tax went up. So that's what's going on. And if the economy keeps doing what it's been doing lately, it might go up again by the end of this year. It might get reassessed again. Do you think that's going to happen again, Lisa?
I think it might. I don't like it, but it is what it is. When I saw it again last year.
When was the last time this happened in the economy where properties were getting reassessed multiple times?
In I would say 2005.
2005.
2005. So I bought my home in 2004. And what bugged me, because I did buy a brand new home too, and we talked about what builders do and builders don't do. This is before I was in the industry. So every single year, my taxes got reassessed. They can do that on an annual basis, guys. Okay? And when they do that, it stinks because it continues to rise. And when you're talking about supplemental taxes, guys, if you guys are buying a brand new build home, the builder pays their taxes on just the land. So that supplemental tax when you're buying an existing home, is roughly, a few $100s to maybe $1,000 of a difference that I've seen so far with my clients. But when you buy a brand new home, it's in the thousands. So definitely prepare for stuff like that. Not all lenders and not all realtors will tell you that. So I'm giving you that information now. If you are buying a brand new build, expect to not only have a higher tax per month, or if you don't impound your account, which means if you don't include that in your mortgage every single month, then expect that that is going to be much higher, on top of the fact that when you get that first supplemental tax bill. And this is where it gets confusing for people, because depending on when you bought your home, if the tax bill has already been sent out for that year, well, then you probably won't see it until next year, and you're so busy moving, doing all those sorts of things, moving into your house, kids, all sorts, you may not remember it. And when the next year comes around and you see a whopping bill for like $3,000 to $6,000,
Yeah,
that's gonna be a shocker. That can be a really, really big shocker.
I know. And like, I mean, just call me and Lisa.
Yeah.
Right? Normally, like around this time of the year, we'll probably get like a client calling us saying, "Hey, Chia, what the heck is this bill? I thought my taxes get pulled out from my impound account." It's like
Yeah.
it does, but that's your supplemental. And by
Right.
law, even though you've paid your property taxes through your impound, they still have to send you a bill.
Correct.
So don't get confused if you receive a paper bill, because they have to send it to you. So that way you can't claim that, oh, you didn't get a bill, so you didn't pay for it.
Correct.
They do that for a reason. And they even make you sign that at closing. But people don't remember that, because it's hundreds of documents, right? It's hundreds of documents, and they forget. And yeah, you actually sign that at the closing table when you get your keys, saying that, taxes due here and there. This is how much taxes, but there's going to be a supplemental bill that's going to be mailed out to you. So watch out for that.
Mm-hmm.
So, and what I normally always do too for my past clients that's bought a home and hasn't experienced that supplemental is, I'll just make them go to eProp. So yeah, I'll just make them go to like eprop.net. That's like your property tax assessor's website. You just put in your address or your parcel number, if you know your parcel number, and then they tell you your property tax. So let me just kind of do a quick example for you guys. Okay? It's public record, okay? It's public record. So let me just kind of pull this up. Let me share my screen with all of you guys real quick, okay? So oh man. See, I kind of pulled one up already. E-prop tax. See, Sac County property tax. So eproptax.saccounty.net. Okay, so you go to secured and you put an address. What was a recent one? Let's do one of my listings right now. How about that? Let's do one of my listings right now. Let's just go and look up a home that's been sold. Yeah, that'd be perfect. Let's go and click here. Let's see this popping up. I want to show you guys something real quick. Okay, so let's go to this one right here, since it's in Elk Grove. Since I'm doing based off of Sac County. Copy that. Paste it here. Excuse me.
Bless you.
Thank you. Okay. So you guys see this right here? This is your annual bill, okay? So annual bill for this home that just closed is about $4,000 right here. But if you click the bill details, it'll tell you if it's paid. And so these are the dates, in case you guys are wondering, okay? April is when it gets taken out from your impound account to pay for property taxes, and December, okay? Those are the 2 months out of the year that gets taken out. Now, let's go back. Now, you see how it says here supplemental? Supplemental is what they're going to be paying. And you see how it's just a one-time thing? Once you pay this, then everything gets taken out from your mortgage every month. And since we're here, let me kind of show something to you guys. Oh, I can't see it no more. Okay, direct levy. This is the Melrose right here. It's $100. $100 for this home every month. No, actually it's every year. Yeah, this is every year. So sometimes, like what Lisa was saying earlier, when you buy a new build, because that area is so new, your Melrose are high. So expect this to be like probably 12 times that amount. Okay? Alright,
Or a lot more, actually, because usually, especially the new build that one of our people were in contract with, it was like almost $4,000.
Just for the Melrose, right?
Just for the Melrose.
Lord.
Just for the Melrose. So that's an increase of about, almost $400 every single month. So, Chia and I will always advise you, if you are buying a brand new home, which is, again, very super attractive. It definitely has its pros. It's easy, it's ready, it's move in, it's yours. You're the first owner. It's great, but when you do that, just make sure that you cushion yourself and you have all of these ahead of time so that you can be very fully prepared.
Yep. 100%. You got to be prepared. And if you're unsure, get a rough estimate of what your payments are going to be. And then when you run it across with like Lisa, find out what the HOAs are. Find out what the Melrose that the new build is. Find out what the tax rate that they're charging in that subdivision is. And then have Lisa do like an estimate for you. So that way you know exactly how much you're going to be paying every month. So that way you can be safe. It's a rough estimate, but at least you kind of have like a starting point, Don't just go in blind and don't just rely on the rep that is inside the new build to tell you, oh yeah, this is how much your payments are going to be. They're not going to include all of these things for you. That's why when you go to these new builds, the Melrose portions and all that is very tiny to it's like a fine print almost.
Yeah.
They're not going to advertise that. They're going to advertise the base model price, the HOAs, and all that. But then the tax and the Melrose, they're not going to advertise that. So
right.
The price sheets they give you, it's going to be fine prints to where you don't even realize it. Especially the first time home buyers. You walk in there and you're so wowed by the new build models, you forget all about the numbers, So pay close attention to the numbers. It's so important. Don't do that to yourself, especially with new builds nowadays not returning deposits.
Yeah.
Oh yeah.
Yeah.
You don't want to be in the middle of that.
Yeah. Yeah. The thing is, what they don't want is you to back out. There's a lot of people right now where it can 10, 12 months. New builds have a tendency to be delayed on closing on their part because they're not able to get a contractor out in time to finish it. So they're afraid that people will start looking around and looking for other houses. So now they're trying to make sure that you're not going to leave, which is not in your best interest.
100%.
And I would not be surprised with everything that's going on with the home builders right now that I'm seeing. I would not be surprised if they say, you know what, we're going to keep your deposit, but now that there's an increase of lumber, you already signed the fact that you'd be okay with that, and you do, okay? Which means they say, hey, well, if you're not going to move forward with purchasing the home for $30,000 more, we're still going to keep your deposit. Mm-hmm. Of course, in my opinion, I think that's a lawsuit waiting to happen because that happened in 2005, 2006, and 2007 as well. But the sucky thing about it is I don't want a situation where our people are coming to these builders not knowing these things, and while they're going through their lawsuit, guess what? They file for bankruptcy and nobody gets anything.
Well, these builders now are getting clever, right? They're writing their
Mm-hmm.
contracts up. They're not allowing the agents to utilize their
Mm-hmm.
own contracts now. And so they could have a wording in their contracts to where they could change it at any time as long as you haven't closed, and they could do that. So
Yeah.
like you got to be careful. And I think the reason why they're able to get away with it too, like what we mentioned the other week, is a lot of first time home buyers won't argue about it. They won't
Right.
fight for it because they don't know what to fight for. They don't know what arsenals they have available to them. They don't even know. And the other day I was telling this to my client. I was like, that's why you gotta have your own agent going there with you, because your
Right.
agent will fight for you. They know the terms. They know
Right.
the vocabularies. They know the contracts. They will fight for you. And if you and
Your
that's
agent pretty much will know what to ask on your behalf, because when you're brand new, or even
Mhm.
if you're not new, you're going to come in not knowing all of that, and they can smell that. It's unfortunate, but the home builders, they will pounce on that and they will be
Oh my
advantageous on
gosh.
that. And if you don't have representation that can counteract that, that is the biggest reason why they presentation, so that they can get away with things like this.
Yep, and you know it's so shady. And it's sad too, Lisa, because
It's very
like
sad.
because these reps that works for these new builds, I mean not all reps are bad, but then the ones that are bad, they're agents just like me.
Well, here's the
You
way that the
know?
builder is making money. One, the reps that work there, they don't make as much as a regular agent to begin with. So they're really really wanting to reel more people in so that they can get paid more, right? And the
Yeah.
other thing is too is that they have a quota. The lender, the
Yeah.
builder, you know, their in-house lender and what all of those, if they don't meet their certain criteria, they get canned. They'll move on to the next one. They're not loyal. So it makes it really really tough for the person that works there. They're a human
Yeah.
being too, guys. I'm not going to blame the rep. I'm going to blame the ethics and the
Yeah.
guidelines that the builder put in place for them. And these people have to feed their family too, so they're thinking, okay, well, I'm going to sell you everything. I'm going to sell you on all the bells and whistles, and I'll just whisper the fine print. I won't show you under the hood. So when you compare, you know, apples to apples, you don't really see it that way. It's going to be something totally different. And I was like, well, Lisa said that all these fees are taken in place. The builder says there's no fees of that sort. Oh, they'll show you those fees, but they'll show you those fees at the 11th hour.
Yeah.
And that's when you're going to feel like you're going to be stronghold, because you already signed the contract, you already released all of your contingencies, and now you have to go that route. Otherwise, you lose the money that you've already put in. And with the builders, you're not only going to have to put in the deposit, you're also going to have to put in, if you're doing any types of upgrades, which most people do, the bare minimal is not going to be what most people want, because they already see all these beautiful bells and
Yeah.
whistles in the model home. So most people will opt for some additional upgrades, and you will have to put the deposit on those upgrades as well. And because those upgrades are quote unquote already ordered, they can put in the contract that if you do decide to do that and you decide to walk, you're not losing that deposit. You're losing the deposit on the upgrades along with that $10,000 that you also put in. And most builders right now are requiring that you put in a minimum of $10,000 deposit.
It's such a sham. Like
Yeah.
how everything is like implementing into these new builds now. It's so crazy because like new builds used to be lovely, used to be nice. Like I used to always encourage my buyers to like go to new builds if they can't, if they don't want to go with a resale home, you know, because they're new, you know. But then like now it's, I've had such a bad taste in my mouth for my client, on my clients' behalf, that it's so shady what they
Yeah.
do. And then, like it just makes me wonder, like can they, do they even sleep at night? Because at the end of the day they're human, you know.
I
Do they
know.
sleep at night? You know, do they go home and do they realize what they did? Oh yeah, I just sold 5 buyers these 5 upgrades. It's like a car salesman all over again.
It is. It is. It
My
is.
goodness.
They do have that reputation, and the only you can't help what people do, right? You can't
Mm-mm.
change what they do, but you can equip yourself with the knowledge and with the representation so that that doesn't happen to you. And we want more of that to happen. We want our community and our people to be able to fight back, even if it's not with us. At least you're well equipped with the knowledge, and now you have some of the lingo. Don't go on it on your own. You do not have to go on it on your own.
Not just that, but then like I'm a close it off with this, okay? Since it's over 8, Lisa, make sure you don't get pulled in with their in-house lender, because they're gonna try to incentivize you and say, hey, look, if you use our in-house lender, we're gonna give you free upgrades, or we're gonna give you up to $5,000 credit towards upgrades or whatever. But so a lot of first-time home buyers see that and they're like, oh, this is great, yeah, I'm gonna go with your in-house lender because that's $5,000. But you have to also understand, how much are they charging you or closing costs to give you $5,000?
Correct.
Because I can almost guarantee every new build that I've come in contact with lately, even with the incentives that they give to my buyers, their preferred lender that they use initially always beats out the in-house lenders.
Yep.
Because they don't charge you a arm and a leg for closing costs to use them. And even if they don't give you any credit, it's still so much overall cheaper versus if you went with their in-house. That's from experience, okay? And that's why I always encourage my buyers to get quotes, shop around, compare your quotes with Lisa, and then go back and forth. And that's why Lisa give you guys options, so that way you guys could pick and choose whichever one works best for you.
Right.
And yeah, that's what I would recommend. Do not go in blind. Go in prepared. Go in with your own lender quotes. Go in with your own representation, so that way you know the lingo and that you're protected and that somebody has your back. And make sure you CC them on everything when you're in contract, because the new builds will not CC your agent. I don't know how many times, Lisa, I've told my client to tell the new builds to always include me on the emails, because if they don't include me, I don't know. And so I always gotta bring that up. It's
I
because
know.
the reason they don't do that is because they want to take advantage of your clients behind your back. So
Absolutely, guys.
I'm gonna
Absolutely.
close with that. I know it's a lot. Thank you guys so much for staying on until 8. You guys all have a good Friday. And me and Lisa will catch you guys next time. All right?
Have a great weekend, GT fam.
Peace out, y'all.